I'm Steve Johnson, Farm and Ag Business Management Specialist. Today, we'd like to discuss, does storing unpriced crops really pay? The answer is, it depends. Let's take a look at what those particular marketing considerations are. Number one, let's develop a crop marketing plan. Think about the bushels that you've stored. Hopefully you did a good job of pre-harvest marketing. You've delivered a lot of those bushels already to generate cash flow in the fall and winter months. Now, what is your plan? Are you willing to put that in writing with time and price objectives? How about calculating the cost of grain ownership? Not only storage cost, but the time value of money, and compare those for on-farm versus commercial storage. Then let's consider futures carry. We have large carry in the corn and soybean markets as we record this video, but it doesn't mean the futures prices will be that high when we get out to those deferred contract months. So what might be your appetite for risk? Do you want to take more price risk, both futures price as well as cash price? And then what is your consideration for the historical perspective of unpriced corn and soybeans? Let's use a central Iowa elevator. And let's take a look at 4 years where every harvest, when about 50% of the Iowa corn crop is harvested, we lock in to what the cash price is at this same central Iowa elevator. It's part of a large regional co-op, but in this case, in the fall of 2018, the cash price was $3.29 a bushel, so that's the anchor. We'll draw 3 lines. Number one, the gold line is the cost for on-farm storage. That's about 1 cent per bushel per month. But we're going to assume that that $3.29 per bushel cash price also has interest accruing at 5%. So each of these years we're going to use an assumption of on-farm storage versus commercial storage. Now let's take a look at that dotted line. That dotted line is the cost for commercial storage. That's 16 cents per bushel for the first 90 days, then 2.8 cents per bushel for each month thereafter. If that's not your particular commercial storage cost, consider calling your local elevator. 4 cents, 5 cents per bushel, probably a reasonable range. But what I want to do is compare the cash price. What you see is the cash price since mid-harvest in October has improved, and now we're back to where we were for recovering on-farm storage. Again, what we want to ask ourselves, does it pay to store unpriced grain? Well, it's early for the 2018 crop, and we'll track this data all the way out to July. So let's go back and look at the past 3 years. For 2017, the cash price at mid-harvest was $2.97 a bushel. But now you understand that, am I storing and am I recovering a net profit for storing those bushels? Let's compare the on-farm storage, the gold line, to the red dotted line, commercial storage. For the 2017 crop, the futures price rallied and perhaps basis improved in the late winter and spring months. And yes, it did pay to store. It paid to store commercially, but I had to make a sale. I had to have some sort of time and price objective and tried to make sure that I sold those cash bushels above the cost of ownership. 2016 crop. Notice that there was rarely a time that I could have sold those unpriced bushels. The 2016 was the record corn crop and still is the record corn crop. So the importance of having discipline and recognizing cost of ownership and trying to sell cash bushels above the cost of ownership, whether those bushels are stored on farm or commercially. And now the 2015 crop. Again, the cash price, $3.39 at harvest. We anchor to the cost of ownership, whether that be on farm or whether that be commercial. I think it's important that you stop and think about that. Where are your bushels stored? What is the cost of ownership? Should you consider an interest cost because there's loans that you could be paying off if those bushels were not stored unpriced? Another consideration is basis. This same elevator, we're going to track basis, but we're going to track basis against the March futures. Sometimes when we track basis and we use the December futures and then we roll to the March futures, let's just plot the cash price at this elevator each of the last 5 years against the March futures contract. For 2018, as compared to the previous 4 years, I would say that we have a strengthening basis. Remember, basis could be deemed as strong, basis could be deemed as weak, or basis can be deemed as neutral. The importance of having multiple years of basis wherever you sell your corn and soybeans is important. This is a strong basis compared to the previous years, and it's likely a reflection of the local demand for corn in this marketplace. It's probably very reflective as the ending stocks for corn is declining for the 2018 crop as compared to the 16 or the 17 crop. When we have tighter ending stocks, we tend to have constant local demand, thus a strengthening basis. At the same elevator, let's take a look at soybeans. The same considerations anchored to the cash price of soybeans at mid-harvest, and then comparing cost of ownership. On-farm storage, 1 cent per bushel per month, 5% interest accruing. Commercial storage, 16 cents per bushel for the first 90 days, then 2.8 cents per bushel per month thereafter. You can see in the fall of 2018 that we barely got back to the cost of ownership for on-farm storage, and we're still not close to what we would need to be for a cash price to justify commercial storage. This is an important consideration. If your bushels are stored commercially, you might want to think about a different strategy or tool as those bushels that are stored on farm, because you've got a lot better chance to move those bushels stored on farm of where you have better basis opportunities reflecting in the cash price. How about the 17 crop? Again, anchored to the cash price at mid-harvest. And you note that for soybeans in 2017, there were not a lot of opportunities to sell cash beans above the cost of ownership, especially commercial storage. 2016 crop, anchored to the cash price of $8.75 per bushel. And you note that those opportunities set in the late fall and winter months, not necessarily in the spring and summer months where we think of seasonals. Having a price objective, perhaps a futures price objective, in this case, perhaps it's March, is what would I need to justify storing those bushels unpriced? And now the 2015 crop, where we got a rally. The rally came late spring. That's likely the influence of South American crop, and that's exactly what had happened. A poor crop at their harvest rallied soybeans, and thus the importance of having a time and price objective. Rarely is that opportunity going to be in July, August, September. That tends to be our seasonal lows as the market turns lower, anticipating another crop. Also, the consideration of basis, that same Central Iowa elevator for 2015, 2016, 2017. And what about 2018? There's the underlying issue. With a lack of exports, we're going to see wider basis, likely the widest basis that we've seen, because basis is a reflection of local supply and demand. We grew the largest soybean crop in history in 2018, and we have a little less demand. Again, good domestic demand, but exports are going to decline to levels that we've not seen in 3 years. Therefore, we're going to see wider basis, and that'll be a challenge for determining whether you're going to store unpriced soybeans for an extended period of time, you're going to have much higher cash prices to justify the cost of ownership. So with that, the key points, number one, I think you need to be able to calculate your own cost of grain ownership. Don't trust that this example are your exact cost. Consider if you're financing grain bins on farm. That's an important consideration. You probably have a larger cost of ownership. Don't forget interest charges, because that cash that you could generate from cash sale could be used to reduce that operating or term debt that you have. Learn to use a variety of tools. I think with the large basis that we see in the fall of 18, some farmers are thinking, well, that futures price will be that high in March or May or July. Not necessarily. And we've got large crops, especially soybeans. There's large carry. The only way to capture that carry is to sell futures, whether that be a futures hedge, or whether that be a hedge to arrive contract that you commit those bushels to delivery and then wait for better basis opportunities, hopefully in the spring and summer months. I think we want to be able to time our cash sales. And I think it's critical that you think about futures carry as well as basis appreciation. If you've got 5 or 10 years worth of basis data, like we were demonstrating here, I think that's a very important consideration. If some bushels go to a processor or to a terminal, maybe you've got different basis data for different locations that you're delivering those bushels. And lastly, I think the importance of developing a crop marketing plan for those stored bushels. That plan can help increase your discipline and overcome the emotions of storing and later realizing that you lost money by storing those bushels too long, not reflecting the cash price compared to the cost of grain ownership. Thank you for your time in viewing this video. I hope that you found it helpful. I'm Steve Johnson, Iowa State University, Extension and Outreach.